All right, let's dive in. Today, we're going to break down the economic record of Donald Trump. We'll be using a source document that really gets into the details of his first term and also makes some projections about what a second term could look like. We're going to stick strictly to the policies and the data presented in this material.
So, what's the big idea behind all the numbers? What's the core philosophy? Well, the source document grounds everything in these key concepts: free markets, cutting taxes, and really pushing for energy independence. The goal, as it's presented, was pretty clear: less government getting in the way and more power in the hands of private industry.
First up, to really understand the case being made, the source takes us back in time. We're looking at the economy before the pandemic changed everything. This period, from 2017 to the beginning of 2020, is really framed as the main benchmark for the administration's performance.
The first major piece of evidence the document puts on the table is this number, 3.5%. That's the unemployment rate. Now, the source makes a point to flag this as a 50-year low, arguing it was a clear signal of a labor market that was just incredibly strong. But it's not just about that one headline number. The source goes a layer deeper, highlighting that this period saw what it calls record low unemployment rates for several specific demographic groups, including African Americans, Hispanic Americans, and Asian Americans.
Okay, so more people were working, but what about their paychecks? Well, the document points to this figure: almost $68,000 for the real median household income back in 2019. It calls this an all-time high, and the argument here is that the economic growth was actually putting more money into the pockets of the average American family.
And to really round out this pre-pandemic picture, the source points to three more key indicators. You've got steady GDP growth, you've got inflation that stayed low and stable, and of course, a stock market that was on a tear, with the S&P 500 jumping over 50%.
So you see all those numbers, right? But the big question is, how? According to this document, what specific policies were the engine driving these results? Let's get into the mechanics of it.
Right at the heart of the strategy was the big 2017 Tax Cuts and Jobs Act. The source basically presents it as a three-part plan. First, slash corporate taxes, hoping to spur more investment. Second, make things simpler for individuals by doubling the standard deduction. And third, the ultimate goal was to deliver direct tax relief to the middle class.
Of course, it wasn't just about taxes. The document highlights a few other major policy areas. On one side, you had a real focus on protecting American industries using tariffs and reworking trade deals. On the other side, there was a big push to cut costs through energy deregulation, executive orders on drug prices, and audits aimed at rooting out government waste.
Okay, so that's the look back in the rearview mirror. Now, the document shifts gears and starts looking forward, laying out a whole series of economic projections for a potential second term, specifically for the years 2025 and 2026.
So what did the source actually predict for this hypothetical second term? Let's break down the specific economic gains it claimed would happen.
The projections really zeroed in on four key areas. The claim was, first, that inflation would cool way down to that 2% target. Second, that real wages, which you actually take home, would start growing again. Third, that the federal deficit would start to shrink. And finally, that domestic energy production would hit record highs, really locking in that idea of energy independence.
Now, you might be wondering about that deficit reduction piece. How? Well, the document points to a specific plan it calls the DOGE initiatives. That stands for Defense of Government Expenditures. And these are basically programs designed to aggressively audit federal spending to find and eliminate waste and fraud.
And for the final section, the document takes a pretty interesting turn. It moves away from the national economy and zooms in on personal finances. It makes the case that a leader's own financial record matters, and it draws a direct comparison between Donald Trump and his predecessor, Barack Obama.
And here's the central claim. The source asserts that Donald Trump's personal net worth actually decreased while he was president, and by over $1 billion. This is attributed to things like business disruptions and just the intense focus required by the job.
This table really puts the sources' comparison side by side. It contrasts how they each handled the presidential salary, what happened to their net worth during and after their time in office, and it points to associated business ventures. For Trump, it mentions Mar-a-Lago events, and for the Obama administration, it specifically references the Solyndra loan, which, you might remember, was a controversial loan guarantee to a solar company that ended up going bankrupt.
So what happened to those financial losses? The source doesn't leave that hanging. It projects that in a second term, those initial losses were recovered, partly through business income from places like Mar-a-Lago, but also from settlements in successful defamation lawsuits. So after all the data, the policies, the projections, what's the bottom line? Let's take a look at the document's final, concluding argument.
When you boil it all down, the core thesis presented is this. The economic policies were all designed to expand opportunities for working families and to reduce the financial burdens they face. The overarching goal, it claims, was to bring back America's economic strength, while also providing protection from what it specifically calls criminal illegals and narco-terrorist organizations.
And that wraps up our deep dive into this source document. It really leaves us with a big question to chew on, doesn't it? When we evaluate a leader, how much weight do we give to the statistical outcomes of their policies versus their personal style and the things they say? Something to think about. Thanks for joining me for this breakdown.